Hey everyone, Joe Stanovic here, Certified Financial Planner. So we've talked a lot about insurance of the last couple videos, term versus whole life. Did a video, like a case study, kind of giving you some ideas of how you can figure out how much term life insurance you need. Today I'm going to talk about whole life. Saw a video on Instagram, how you can use life insurance during your life. It's called life insurance for a reason, as this guy says. I'm going to try to debunk that, or I am going to debunk that. So we'll talk about that in a minute. But first, wanted to cover what exactly is whole life, just make sure, kind of a recap. Second, when whole life might make sense to consider, and then we'll talk about the loan and all that stuff. So whole life, reminder, permanent life insurance. There's a bunch of different types of whole or permanent life insurance, universal life insurance. There's a lot of different types, but at the end of the day, the goal of this type of life insurance is for you to keep it for your whole life. Instead of with term, it's for a certain number of years. Whole life is designed to be there indefinitely. It's a lot more expensive because of that. And so it could make sense in certain situations based on your financial planning needs. So one that comes to mind is if you have a large estate, okay? So if you have, let's say you have a very successful business, and you have some real estate investments, you have a brokerage account, some retirement accounts, all that stuff. You're married, maybe you have some kids too. So that's kind of the backdrop. And let's say the value of that estate is $30 million. There are current laws federally that exempt a good amount of that estate from tax. It's called the estate tax exemption. Currently in 2023, it's just shy of $13 million for you. And then it's $13 million for your spouse if you're married. So combined, you can avoid estate tax on close to $26 million that's being transferred to your heirs, all right? But this case, in this example, the estate is worth $30 million. So there's $4 million that is subject to the estate tax. The estate tax could be as high as 40%. So if you take 4 million that's subject to the tax times 40%, that's $1.6 million of estate tax. That's a big check to have to write, or your beneficiaries, your kids have to write to the IRS after they inherit the sizable estate. If it's a business or maybe it's real estate, those things may not necessarily be liquid or as liquid as you want them to be. So whole life insurance or permanent life insurance could absolutely be a good solution in a case like that. If you have a $30 million estate, you could hopefully afford a large permanent life insurance policy to help take care of some of those tax issues. Absolutely a spectacular way to use permanent life insurance, okay? So let's talk about when permanent life insurance does not make sense. So I'm gonna cut to a video for a second, or for about a minute, and come back and we'll talk about it.
You're supposed to use life insurance while you're alive.
It's called life insurance, not death insurance. Let me show you why. So imagine your life insurance policy is a house. You see, every time you make a payment on your house, you build equity in the house. You can then use that equity for whatever you want by getting a home equity line of credit. See, but life insurance is way better. Check this out. With life insurance, when you put money in, you build equity in the form of cash value. That cash value is guaranteed to grow 100% tax-free. The money's protected against judgment and lawsuit in most states. You can access the cash value at any time for whatever you want by taking a policy loan. But unlike your house, there is no credit checks required. There's no financial statements required. Unlike your house, there's no repayment terms required. You can take the money and buy a car, go on a vacation, or do an investment to make more money. And the whole time you're doing this, you're not interrupting your guaranteed compound growth.
Okay, Mr. Burr. Yes, your muscles are bigger than mine. Cool. I know you're just trying to make a living. I get it. But come on. Using cash value from a life insurance policy to buy a car? Come on. You know, to buy a car, invest in a business, it's just, For most people, I mean, we just talked about a $30 million estate tax scenario, right? For most people, permanent life insurance and the ability to borrow against it is just not going to happen. Okay, so let me kind of break it down and tell you why. So let's say you have a $500,000 death benefit on a permanent life insurance policy. Cash value, which he does a good job in that video of explaining, cash value of this policy is $100,000. Okay, so you call your insurance company and you say, hey, insurance company, I want to take a loan out on my cash value, $50,000. Insurance company will gladly write you a check for $50,000. You're going to pay interest in California up to 8%. That is the cap on the interest rate that the insurance company can charge you in the state of California, which frankly, we're probably close to that cap if we're not there already, given just the interest rate environment. So you have a loan out on your cash value. You don't have to pay that loan back necessarily. You might want to, I'll explain why. But if you don't, then what happens is when you die, as long as that policy has not lapsed, which it might, but if it has not lapsed, the insurance company, the death benefit that's going to go to your heirs is going to be the original death benefit, that $500, minus the outstanding loan. If you took out $50,000 and you had an 8% loan in, let's say, 10 years, that loan's going to be over $100,000. Okay, that's going to reduce the death benefit to your beneficiaries. So originally you wanted $500 to go to them. That loan has to get paid off with death benefit proceeds. The net death benefit goes to the beneficiaries. So that's one downside of this whole loan strategy. The second part of it is if the policy becomes at risk of lapsing. Okay, this happens a lot. All right, so you have this loan. You're maybe paying it back, maybe you're not, but you're still paying your premiums on the life insurance. So you have this loan and you have your normal premiums you got to pay. Premiums are not necessarily fixed all the time with life insurance. There's a chance if you want to keep that policy in force for longer and longer and longer, you may need to pay on that policy for longer than you anticipated. If you're retired, maybe you're on a fixed income, it may get to a point where it becomes difficult to pay that premium. If you stop paying it, that cash value gets burned down because of the cost of life insurance. You've got this outstanding loan, you have a lapsed policy, it's gone. The policy is gone, the cash value is gone, the loan could then create tax liability for you. And you may be on a fixed income and you're retired, cost of insurance gets more expensive. There's so many downside caveats to that idea of borrowing against your cash value that you could blow yourself up, not yourself, but your policy very, very quickly. I have a client that has a permanent life insurance policy, been paying on it for 40 years, and it is expected to become basically lapsed or insolvent by the time he's in his early 80s, unless he keeps funding it substantially longer than he originally planned on funding it for, because of that cost of insurance. And if he doesn't do that, policy's gonna lapse and he doesn't have life insurance. So that's why I say, like, it's not necessarily valuable for somebody to take out a permanent life insurance policy and pay like $200 a month. You're not going to be able to do this whole borrow against cash value thing. You got to put a ton of money into this thing. I'm talking $40,000 a year. And that's a lot of money. So take all that with a grain of salt. That's not what I would use permanent life insurance for. Kind of look at it like, what do you need life insurance for in the first place? You answer that question first, and then you decide what type of life insurance do you need to solve for what you're trying to solve for. Not this lending and Lambo buying and all that stuff. That's just not how these life insurance policies work. Any questions, or if you have a policy that you wanted to have me look at, do an in-force illustration, I'll look at it. So feel free to reach out. Subscribe to my YouTube page or the channel, and I hope you have a great day. Take care.